go. Really don't want to do BTC without him because it's going to be Elliott wave and he loves that stuff. So maybe we'll come back to BTC, right? Let's. So what do you guys want to start with? Let's check out NAS, S&P, and US 30 maybe. There we go. Start off on daily. See what we can see. Right. On Friday, well, as of the last stream, you guys know that we were looking for this low in particular to be broken, which means if we did break that low, it would confirm this entire model here for us as a zoom model, and then we were looking for the retrace to about where it is now. The fact that we didn't break the low here means it isn't a failure swing getting taken out, which isn't a break of structure. So what we have to then look at is the entire move down as a retracement instead of anything bigger. Let's go down to maybe 4 hour. We'll probably see it better. 6 hour, what can we see here? Right. On H6, right? We'll keep these two levels on for now. On what's up, Hamid? On H6, right? Massive imbalance created here. This was the fair value gap created on the move up. And you can see all price did was come back, rebalance, took the liquidity below here. And more importantly, came into this order block here, right? That's what it did. We'll make this a different color so you guys can see that. Let's call it demand supply. Right, came back into that order block and then shifted away. Sideways for a lot of days. 28th was this, around the 28th of December to the 6th of January. Right, so let's get rid of the order block. We know it reversed from an order block. Let's get rid of that, and then we know that this was the fair value gap that it used to catapult it back up. Now we had some sideways action in here, and I've been telling you guys that reversals happen from areas of liquidity or liquidity pool. So there is obviously, or was obviously, liquidity below this low here that it could have used. And then we went into a sideways period. Now, when we start going sideways in a range, and then we start to expand outward, expansions.
Hello guys.
Hello, my friend. Hello.
Anyone can hear me?
We can hear you. I don't know who you are, but we can hear you. Ahmed. All right. So once we started to expand out of a range without taking liquidity below the range and then moving up, we are now looking for retracement into equilibrium of the range. So expansion would seek an order block. That means we need to look where this expansion here is going to seek an order block before any sort of retracement or reversals. The order blocks in this level would be obviously this massive order block up here. I'm more interested in this order block here, right? So this was the last order block, and then price moved away. So we're looking for expansion to go to order block. Now, with expansions going to order blocks and this consolidating, consolidation seeks equilibrium. So what we had to then do was take 50% of this range here and look for possible entries. So if we took that as the range, 50%, I'm not sure if I marked it off, I did, okay, 50% of the range becomes this level here, 10,879, and you can see in that level there we have this imbalance. So this is more or less where we would be looking for longs if price had to come back into this area here, right? This FEG, 50% of the range or equilibrium of the range, we'd be looking as this being some sort of inducement here. failing to come to the level before moving away. Let's mark that off as inducement. Right, so there'll be liquidity resting obviously below this, and our target is the imbalance down here. Now, the one thing to take away from any price action is that the market is always seeking to rebalance inefficiencies in the market, from liquidity to imbalance and imbalance to liquidity. So when we went from liquidity here, taking here, and then this obviously to the left of it here, the market then sought imbalance, and anything to the left would be where it would be looking, and you can see the imbalance that I just showed you here. That was the imbalance it sought. And reversals seek liquidity pools. So if price was going to reverse, it needed liquidity, and if price was expanding out of this equilibrium or this range here or this range here, then we need to look for it to expand to an order block. So expansion seeks an order block. There's your order block. Retracements seek imbalance. There's your imbalance in here. Right, and reversals seek liquidity. So there's your liquidity below this area here, and then price reversed, right? So the or the anatomy of any order flow or price action would be: consolidation seeks equilibrium, retracement seek imbalance, reversals seek liquidity pools, and expansion seeks order block. Now, maybe we can use this entire range here, created here, or let's call it here, right? That is the range, and we'd look at 50% of this range for as the equilibrium of the range. So let's take this here to somewhere down here, and then this would be 50% hanging about here, right? Just below the order block. So you can see that's some sort of confluence, that if we expect expansion out of this range to go to an order block, and if a consolidation seeks equilibrium, then pullbacks into the level should seek the equilibrium of this range, which is the 50%, and this expansion would seek this order block here, right? So confluence on both ends of the world, that we're looking for NAS to go a bit higher. And when retracement does come, we'd be looking at this area here, all the way down here for any retracements, right? With the inducement liquidity sitting below there, and then we'd be looking to take out the liquidity here, come into here, balance this range out, and then move away higher, right? So we'd be looking to see if we can get in there, give us a smart money reversal pattern, and then we'll look to target liquidity here, 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 and anything else that's created in the range. Target all of the sell side liquidity down into imbalance, because once we move from order block or liquidity, we'll seek imbalance, right? So that's the plan for NAS. Go a little bit higher maybe in the coming week. Let me change this to a different color. Right, so seeking the equilibrium of this range up here, and we'll make it dashed, right? The previous high, you can see we're approaching the previous real high in the market at this level. So a lot of confluence here, previous real high, order block, and equilibrium of this range. So in the low time frames, I don't think we would want, or we are going to get price moving lower. If you look at this particular time frame in price, everything seems to be balanced here with that long wick on, was it CPI wick, balanced this entire price range and then moved away. We had a small pullback and then price moved away again. So there's nothing that is not balanced within this entire range here. There's no need for price right now to come anywhere this low without seeking an objective on the upside, and that objective being the order block from the expansion here to there. Now we could possibly let's try and use some fib projections just to see whether any of those give us any indication, right? We'll use an order block down here. We could use the series of order blocks here to here. Projection. Right, so that gives us your initial impulse from this low was 1.5 standard deviations, which gave us this move up here. After the retracement, the second objective was at 3.5 here. My next objective, which is the real high in the market, all the way over here, would be 5.5. You can see that there. That's, and I can't even make this shit up. It's almost exactly the same high as the same fib level as the previous high, right? So that's your objective, and then terminus would be the ending moves of anything. If you want me to show you what terminus is, I'll show it to you in a second. But obviously we'd be looking for price to start fading or failing around 6.5 to 7 standard deviations away from the original order block down here all the way up here. Once we get there, we can probably fib something here, an order block created here or a range created here, and see how far down that takes us. Now, if we had to look at what terminus is really quickly, all we need to do is go onto a daily chart, and let's get rid of this, let's get rid of this. Look at the original consolidation at the top here, right? So that would be this guy here, right? The original consolidation. Now, if we are taking a series of candles for, let's do this. If we are taking a series of candles for projections, we are only interested in body to body, because that is where most of the volume is actually in the bodies, right? So body from here to here, I think that's the highest body and the lowest body. Then let's take a look. First initial impulse here, you can see you would have caught a move down there. Second objective at the 3.5, there's it down here, right? Third objective, 5.5, there we down here, right? So these are all targets and fib levels. And finally, terminus at 6.5 to 7. Let's take a look here. There we go. Right, there's your 6.5, there's your 7. That's terminus. Those are reversal type levels that we are talking about, right? So that's very quickly what terminus is in terms of ART. This is called ART, right? ART, Advanced Range Theory. These are the, if you guys are interested in this, I'll I'll post this in, well, this will be in the Discord. I think I have already, but I'll just double check that I did. And then what I like to do is, well, this entire range is done now, right? So there's no need for us to use this range because we've come from original consolidation to all of the targets, initial impulse, first objective, second objective, and terminus there, right? So we've done all of that. Now we need to find out what's going on the upside of things. Now, is that someone saying something?
Yeah, hey, I was going to ask one quick question. So,
Yeah.
As far as this move, so sometimes I get confused, or not confused, but I'm always wondering about direction, right? Like, can we come down to our mid-range of the equilibrium and then move up to finish the move, or
yeah,
does that
somehow
it's possible. Change?
Yeah, it's possible. But what I'm saying is right now is, and you can see it here on a daily, right? The range is balanced. You see all the wicks here to the downside? It balanced here,
yeah.
Balanced here,
right.
Balanced here, balanced here. And then we had this wick up. All right, so let's zoom into this a bit here, right? Because this starts to come into BPR, brick wall theories now. Right, so let's change that up. This move here was actually price going up, price coming down, next candle open, price went down, price came up, price went down. So if we had to put that into something separate on the right hand side so we can see it, price moved up, it came down, right? Next candle open, price went down below there, came up again, next candle open, price came down, and then took off. So you can see that we had in this range here price moving 1, 2, 3 times inside here. Doesn't look like that to you on just a wick down move and then a move up. So it's 1, 2, 3, right? Balanced price range.
Right, they're no bear body
Yeah,
candles, right? They're all
so if we had to look at, if there's no fair value gaps here and there aren't any volume imbalance. So what a volume imbalance would be, then I'll try and find one for you, is this candle here, right? This candle has a volume imbalance in here, meaning, let me point it out to you. Here, right? You can see it was wick here and wick here, no candle bodies inside here. Now volume imbalances also become targets because they also work as gaps or voids. So you can see that that is not a balanced price range, even though you had a wick down here. The next candle actually opened up here, went down, or came up and then closed downwards, right? But it's still not a balanced price range because there's no volume in this move here. So this is a red flag in terms of balancing anything. The next candle came and completely balanced all of it here, right? So volume imbalances, you can find one on NAS recently as well. This to me on a daily is not even balanced, but let's go down to something lower. There's also a volume imbalance down here. Can you see that? That was last week's market opening. We had a lot of wicks, no bodies. So this is going to become a target when price starts to come down. You have to have candle bodies closing inside here. For now, it's balanced enough to go up, but on the way down, this is going to have to fill up with a candle body. The market won't leave that behind.
Tesla's chart is nothing but
volume imbalances. Yeah, nothing but volume imbalances. So you can see volume imbalance here to the left, and then candle body closed on the move down here. Right, so you may think fair value gap, okay, but it's more a volume imbalance because the bodies, there's no body closes in here, and there's just wicks inside these ranges here. So volume, it's not necessarily balanced, that's repricing, Chief. Okay. Right. So, like I said, on the way down, this is going to be on the menu here, right? And you can see it coincides with the inducement level that we had before the imbalance down here. So in this candle in particular, only buy side was offered, no sell side was offered. And when it does come here, there are going to be people who would want to sell below the market price. Right, what else do we need to talk about? We can probably go low time frame. I don't want to get into any days of the week and mini profiles, not yet. We don't need to. But again, let's have a look here. So on Friday, I think I took this short in here, and this broker is a bit whack because the broker actually stalled on Thursday here, right? So it created all of this imbalance here, but I won't take that into account. I actually shorted here, and I closed here. Was looking, and I think I did mention to you guys that this was London. So this happened about London, and this was New York inside here. And I did mention that I'm going to be closing because this was not balanced here, right? So New York is going to want to come back and target this imbalance heavily, and that's exactly what happened. Now, I did want to see price roll over here at some point and actually go lower, but it doesn't seem like we are going to be getting any of that coming soon, because if you look at the order flow, it's moved from market maker sell model to now market maker buy model. So this was sell model all the way down here, at this point, we can almost split it in half. Something changed here, right? We started becoming a buy model. So when we do become a buy model, all of this is on the menu now, all of the highs. If you go on a daily, all daily highs are on the menu. Right, so until objective is reached, we should technically only be seeing higher highs and higher lows, right? You haven't seen any lower lows in this range so far. If I had to look for any longs this coming week, I would probably look at Monday, Tuesday, making the low of the week and targeting specifically on an M30 or H1. Let's have a look. If we can get as low as this, I'll take it. Let me just get rid of this fair value gap here. If we can get as low as this between Monday and Tuesday. So obviously first fair value gap here. FEG. And secondly, let's see what the reaction is after breaking a previous high around this level here. Anything below this level at the moment is balanced more or less here. So these would be the only two FEGs I'd be looking for come Monday, Tuesday, right? So if Tuesday is going to be low of the week or Wednesday is going to be low of the week, then we're going to see price move up and then start to come down for these. We don't want to go lower than this. Let's just check on a smaller time frame. Is there any imbalance below this? There is. So very small possibility that then this becomes an inducement level in itself, liquidity resting below it, and then there's your actual fair value gap lying in here. Balance this range out, take the liquidity, and then start to move up. So if we
Monday's a holiday, Poison.
Monday,
just
sorry,
remember
Tuesday,
that.
Tuesday. Yes, you're right. On Tuesday.
Well,
So as the market
the
opens,
days
shorter
a
week.
little screwed.
Yeah. So shorter week, things will start to get sped up in the week. So if price wants to come and rebalance here, that's fine. There's sell side liquidity resting below here. We've taken the buy side above here. This looks nice. Let's mark that off and keep a note of it, and mark this fair value gap off as well. So come Tuesday, you're right, Tuesday, there we go. Sell side liquidity, right? And in particular, if we come and pause in here and stop in here, would be good. Now, I actually thought at the time, on Friday here, that we would dip into this fair value gap, but like I said, when time is not on your side, and if I have a trade in London, and if I haven't closed it before New York, then that's trouble for me, right? So at the time, I thought that we could possibly dip into this fair value gap. Let's zoom into price here. You can see we weren't far away, right? This wasn't too far away from here. And the fact that we didn't dip into it, we've left this imbalance down here, means that this level here is possible inducement. And people will now, and since we broke the highs again, that people are now more bullish, and then the market starts to slowly do that. Once we balance out here, then up only continues. In terms of entry models, I used an M3, I think, in this particular price range. Where were we? Here. Right. So here's your buy side liquidity taken here. Here's your market structure shift happening here, right? There's your order block at the top. There's the FEG here, market structure shift. So again, early market structure shift model. Once we close below a previous FEG here, that is a shift in market structure. And we'd be looking for a retrace using any fibs to short. Let's just have a look at what this actually turned out to be. 50% exactly, right? Go on to the PA fibs. That was 50% retrace, and then market moved away. Now you can see zoom model again, accumulation, failure swing, open liquidity run. As soon as we broke the low of the failure swing here, that now turns into a bearish structure where we've made a lower low. Price retraces, and we didn't touch the order block. We came into the same candle as the market structure shift, and then price moved away. Now, if you aren't taking these early market structure shift entries, which I find that you could get caught out on, because, and I actually did get caught out because I first took this one, price moved away, and I still had my stop above here because I wanted to see it come here and then go down, and this took me out. Then re-entered here, but what I want to tell you is if you're not taking early market structure shift entries, so this would be the market structure shift MSS early entry, then you'd look for the ICT 2022 FEG model. Right, so ICT 2022 model, HT trades, no issues, brother, no issues. We're just doing the things that we do here. So with ICT 2022 model, and you guys know that this week we are going full swing with the lessons, right? In the past, what we've done is we've combined lessons with pre-market analysis. Not about that life anymore. So pre-market analysis will just be pre-market analysis. And then this week we'll be going with all of the lessons. ICT 2022 model, very simple. Lows being broken that leave fair value gaps behind. So there's your low being broken. Here's your fair value gap. That's your entry, right? Simple as that. You want to look again. Any low being broken, fair value gap would be your entry, right? So any low that gets broken that leaves a fair value gap behind is your entry. Now, why market structure shift works well is because if you are bullish, right, and depending on the time frame that you look at, if you are bullish, then you don't want to see these fair value gaps being broken. You want price to dip into the fair value gap and continue up, dip and continue up. Once fair value gaps start being broken, that's market structure shift, and save your stop and close your trade, because chances are, just as if you bearish here and price closes above this fair value gap and my stop is above here, I'm closing this trade because the fair value gap is not being respected. Price is now closed above it, consolidated. What's next on the menu? This guy. It's going to take you out. Rather save your stop, close your trade, take a smaller loss if that's the case. Right, so with that model, whether you're using a 15-minute, M30, H1, whatever it is, right, you'll find your model, and the model is as simple as, let me show it to you, right? NFP. NFP highs were broken. Left a fair value gap behind here from this candle down here. What happens? Price rebalances that candle into the order block here and moves away. So anytime highs and lows are being broken that leave fair value gaps behind, those are your entries. Where's your next entry? If you simply use only this model, then that's all you need. There's a high here. There's a fair value gap. There's a rebalance. Price moves away. Simple as that. Right? That's the only model you would need, because now the order flow is bullish. We're not looking for sells. We're looking for sells when the fair value gaps start to get broken. So if this was broken and this took some sort of liquidity, then I'd be looking for that to do that. But if order flow is now moved from sell side to buy side, then I'm looking for fair value gaps on particular time frames to long and take higher. So the simplest thing I can tell you guys is fair value gaps that break highs, that's where you need to be entering. There's a high, there's a fair value gap inside here. Price comes into it, moves away. It's as simple as that. I don't know. If you know what the order flow is, then you're only going to be looking for these fair value gaps. If you know the order flow is bearish, like here, in this particular time frame, there's a fair value gap here. Price came into it, failed to go higher, and broke down. So now this big order block becomes a mitigation block. This becomes a market structure shift inside here. We would be looking to sell any fair value gaps that were created on the break. So if this was the fair value gap being created here, so the top of that candle to the bottom of this black candle, any price movement into the fair value gap, like you see here, that's an entry. And you'd keep pyramiding down. There's fair value gap. This candle dipped into here, that's an entry, right? There's a fair value gap. Is there a fair value gap? There's probably volume imbalance in here. Look at that. Price dipped into that, continued lower. Right, so this is how most successful traders pyramid the entries down. They obviously would take this as a low risk sell. The second one would be distribution. And any third one would be redistribution. Liquidity run. Once we got the liquidity run and we had a market structure shift inside here, right? You could say market structure shifted once price moved above here. Fair value gap, price broke above, high being broken, price retraced where? Fair value gap, imbalance, and moved away. So at this point here, if you are shorting, you've been short here, here, in here, and you actually may have gotten out, I would say here, right? Because this move up here went through these fair value gaps and made a higher high here. So I actually would have been out here. But if you didn't and you caught this move down here, you're going to be out inside here because price is starting to move higher. Change of character, break of structure, all the good bits, right? But we'll start diving into that this week. It's probably one of the two models that you would need to know to take any trades, right? Simple enough. Highs being broken, leaving fair value gaps behind. This entire zone becomes a buy zone. You're going to be looking inside here. If you are afraid to take this blindly, then you're going to look for market structure shift within the zone. So we are within the zone. There's your down candle. So all down candles being formed inside the zone are order block candidates. Once price trades through the order block here, it validates this as an order block. There's your fair value gap here. Once price trades through this fair value gap, that's a market structure shift, right? I've told you about that before. There's a high being broken that leaves a fair value gap behind. There we go. Price dips back into it. You are buying. Everything down here is more or less balanced. Price moves away.
And this is, for me, Poison, this is probably an important distinction. So on that move down, right, my mind would start thinking, oh, that was all distribution.
Yeah.
We're about to start making a move down, but that move didn't actually break the FEG to the left, right? It didn't even trade through the big the big up candle there.
Yep.
So we never actually broke any sort of structure there, right?
As the moves start forming, right? So we know that in bullish order flow, that means price moving upward. Every retracement that forms or down candles that form are order block candidates, right? So all of these are order block candidates. Now, an order block candidate or a good order block candidate would be an order block that swept liquidity on both sides. So I would consider, let's zoom into this guy a bit, right? Right. So let me repeat what I just said. A good order block candidate is one that has swept liquidity on both sides. Let's check that out. If I were to use this down candle here, or think of it as an order block, because remember, not every down candle in an up move is an order block. Most of these are just retracements and shelves, right? A order block candidate would be one that took liquidity on both sides. So if we zoom into this particular guy here, there's liquidity of the previous candle here, taken. There's liquidity of the bottom here, taken. So this has swept liquidity on both sides. For me, this is a good order block candidate, right? I won't say the greatest because it's a lot of wicks. Maybe on a lower time frame we could refine that. So any price coming back into this guy, like here, I'm okay with that, provided that the mean threshold of the order block, which is 50%, is not traded through or closed below, right? So when we start to use order blocks, we're looking at the mean threshold. 50% of that order block, we're good. Price not trading through it, we're good. So once that starts to happen, we know order flow is bullish, clearly, right? Price has been going higher and higher and higher and higher. These are retracements and they are seeking imbalance. There's your order block candidate. Down candles forming at the FEG or your level that you are interested in are all order blocks, meaning this entire series of down candles here are order blocks, right? Let's take this one away. That means when price trades back into this, and I'm going to show it to you as we move, we will be marking FEGs like this, but more importantly, we'd be marking the tops of order block candidates, right? Entire series of order blocks, we'd be marking this guy off, right? So now we know price has come into the FEG and to the top of the order block there. Look at that. Respecting the FEG, respecting the order block, and definitely not gone past the 50% of this entire range here. So that for me is good. So if you don't take these blindly, because obviously if you take them blindly, then your stops are obviously below here. Then you'd be looking for market structure shift, and market structure shift happened once this, let's zoom into that. Once, so this is a down candle forming at the lows that took liquidity here. We now start to think zoom model, right? Make sense? Accumulation, failure swing, open liquidity run, push. We've gone above the failure swing high. We'd be looking for any retraces. That's where this guy, if this guy comes here or this guy comes here, you take that blindly. So if, let's just make some squiggles here and come down to M3. All right, let's try and find where the squiggles are. Here we go. Someone needs to be muted. Not too sure who it is. Right, there's the squiggles here, and we can look at the zoom model in detail here. So at this point, we had this FEG here. We had the order block candidate inside here. Now, what are we looking for? So we're looking for zoom. So we had accumulation, we had a failure swing, we had the open liquidity run. Then we had price trade all the way up here, right? Once we break the failure swing high in bullish order flow, that is a change in direction. We'd be looking for retracements and then continuation upward, right? So that's your zoom model. Where would the candidates in a zoom model be? We'd first look at, before that, market structure shift. Lowest closing candle in this series is a down candle, a black candle. I'm happy with that because lowest closing candles that are candidates for order blocks is a down candle. That's a good candle. Highly unlikely these candles get raided again. Now, if the lowest closing candle was a up candle or a green candle in my case, then it lends, it opens us up for price to start raiding back into the order block or even below, right? So down candles forming that are the lowest candles, order block candidates, these are good candles. Now, with the with the market structure shift, we look at the previous candle to the lowest closing down candle. There's your FEG here. And remember what I said. When price starts to close above FEGs, hold on one second, I have to mute someone here. This guy. How do we mute this guy? Just mute him here. There we go. Right. Once FEGs start to get broken above, you are not thinking shorts anymore because price is starting to close above this FEG. But for early market structure shift, we're only interested in the most recent FEG, which was this one. So in this case, this candle here traded through the order block. So that validates that as an order block for us. Fair value gap. This candle closed above it. So that is a market structure shift, early market structure shift. Remember, other guys are going to tell you, let's wait for price to come above this high or this high. Then we think change of character, break of structure, all of that. But we know a bit better. We'll be looking here. So order block validated, market structure shift. We're looking for retraces back into the range, whether it's the market structure shift candle itself or something else. There we go. Price comes back into this range here. I'm buying. Stops are always going to be below here because these areas are fair value for buying. You don't want to be putting your stop directly below here because price can still come back and stab at it. So unless it moves away significantly, then you're going to do, because look at this. Let's drag this across. See here? Price stabbing back into it. And then we get the movement away.
Yeah, it seems like there's plenty of examples where the order block gets tagged again, right?
Yep.
That almost seems like your safest entry because
Yep.
it's your lowest entry, and then you have the best stop loss that's not going to come.
Yeah, so there's times where it's going to give you entries and there's times where it doesn't, right? But once you start to see things in terms of, okay, this is Zoom, right? That's one. But more importantly, sell side was taken and then immediately buy side was taken. What does this make? Dealing range, right? We took sell side and then we took buy side. It makes a dealing range. Any retracements happening should be within 50% of the range. Ideally 61.8 or 70.5. So anytime you get retracements coming in around the 50%, and ICT will tell you that FEGs in or around the 50% fair value for buying. There you go. That's one there. 61.8% tag. There's another order block in here. All the good bits, right? Your stops are still going to be below here. Remember that. Until we start moving away, your stops are still going to be below there. Right. And then price moves away. Now, remember, like you said, tagging the order block would probably be the best candidate, right? Now, it depends which time frame we're looking at, because in this time frame, all of these are order blocks. And then this tap here is a candidate there, right? You can see that, tapping the order block. But if we went maybe M15, we probably would have gotten a better order block candidate somewhere in there. Did we? Right, yeah, I think here. See that? Let's darken it up. There. Price tagged the order block and then moved away. There's your tag. That's the order block. Gone. Right? So depending on the time frame you use, there is no, I'm going to say this again, there is no speed if the order block has not been tagged. So if price starts to move away, right, then tag the order block. Once the order block is tagged, there's the speed. Makes sense now? No speed if the order block has not been tagged. Right, so yeah, that's enough. I didn't even want to get into this far, right? So that's what we'll be tackling this week. But anyway, same story across all of the indices. They all look the same, right? So I think tomorrow and Tuesday we'll get more into the indices and all of the other stuff here. Right. Nico's here. He is. Good job. Right. Let's get a Bitcoin and then we can move out from there. Right. Radio. What do I want to be using? Let's have a look. Do I want to use this? Do I want to use... I'll use this for now, right? Invite only, Genesis Neowave. Let's get on to 3 month. And orange. Right, off the highs, 3 counts I'm watching. Wave 1, wave 2, wave 3, and we are still in a wave 4. A wave, A, B, C, B wave. We're looking for the C wave now, right? Now, if this is going to be an expanded flat, then we would expect it to go above the level here. It took liquidity below, we'd expect it to come above the level here and then roll over. So that's the one count where wave 3 ended off there in this particular time frame, and now we're looking for a wave 4. If I up the ante by just 1, it means that this is wave 1, this is wave 2, that stays the same. Wave 3 ends here. This was an A wave, this was the B wave, and this is the C wave. Now in this particular count, it leaves us with less upside, meaning that here's your A wave, as opposed to this being the A wave, this retracement here is now the A wave, this is the B wave, and this is the C wave here. Where would this most likely want to come to in this particular count? Order block candidates. Up here, and there's imbalance up here, right? So we would look at that being a wave 4, this being the wave 3, this the 1, this the 2, which means that the wave 5, since wave 3 is not extended, wave 1 is not extended, wave 5 would be wave 1 plus wave 3 projected from wave 4, 100% extension, 6,378. That's what I'd be looking for in this count, right? In the count before this, it's a slightly different. We have a larger B wave here, and I'm leaning more towards this one than the one I showed you just before that. We have a larger B wave here, ABC. Let's have a look at how much lower it came below the wave 3. Because remember, Slot, you asked a question yesterday, I think it was, can wave 4 go lower than wave 3? So you're not too sure if that was a candidate for a wave 4 or not. So 1,
Right.
2,
Yeah.
3, 4 somewhere, and then 5 somewhere, right? And that can be an expanded flat, or you can get something that contracts a bit more, which is showing more weakness because it's a downward correcting move, which means it stops here somewhere and then rolls over. Now, I haven't seen too many expanded flats in BTC history for me to say that. Let's take a look here, right? If this was, let's do this, ABC, A wave, B wave, and we're looking for a C somewhere. If this was a B wave that we've just completed, how much lower did the B wave come past the low of wave 3? For that, we would need the 236, 382, and a 414. This is old school minus 0.414. Old school fibs that I used to use, right? So this finished off at the 236 level below wave 3, right? Now, had it gone to the 382 or the 414, I would then most categorically say that it shouldn't take out the A wave high. but the fact that it went to the 236 gives it the opportunity to take the A wave high out as an expanded flat. So A wave, B wave takes the range low, C wave takes the range high. So it's sweeping basically both sides of the range and then rolling over, because clearly order flow is still bearish, right? So this is the count. And what candidate would that then give us for targets, right? So if we take the length of the A projected from where we think the B ended up to 1.618, I'd take that. It puts us right here in this imbalance for BTC there, right? 27K to 29K and order block above it. So possibility that we get into there for the 4. If that's the case, then we know that wave 3 did not extend on BTC. So wave 1 to wave 2. Wave 3 didn't even reach the 1.618, so no extensions. If for some bizarre reason this just does this and hits the 1.618, then we'd probably mostly consider that 3 probably ended somewhere here. I wouldn't like it, and then 4 does this. I wouldn't like it at all, but I don't see that happening anytime soon. So it means no extended waves within this, so we would take the length of wave 1 to wave 3, projected from 4, and 100% extension puts us at 7.4, right? Puts us in the huge COVID order block. That's where that puts us. So 29K to 7.5K.
Yeah, so the light has a count where he's considering this as part of, he's considering 3 to be extended, right? Where we're currently working on a 4 of 3 still. So this expanded flat would be, yeah.
So
the only thing that's weird is that the 2 of 3, there really isn't much structure to the 2 of 3, right?
you don't see it. Let's have a look at it. The light just showed the count that you're looking at for BTC in Discord, please. So
Okay.
look at that. Angela, I'm doing BTC now. You can see that we are doing BTC. Let me just grab a drink while the light posts his BTC chart there. So I don't see from my point of view, a valid 1, 2, 3, 4. So is he saying that we're doing a 4 of 3 here, and then we go down here for the 3, for the 5 of 3 to make the wave 3, and then we do that? Just show that. Just show that to me, Nico, please. I'm coming back now. Right, Nico, Slot says you have a count. Okay, here we go. I'll put it up here. I don't think you guys will be able to see it, so only I would, but let me have a look here. Right, so 1, 2, 3, 4, 5. Yeah, I see what, can I do this? Yes, will it allow me? Yes, it does. Right. So this is the lights count, right? We see that?
Yep.
Right. So let me, can't even, okay. Let's get rid of that, and let's get rid of that. So for me personally, and Nico knows this, that 1, 2 as the main, and then this being a 1, 2, 3, 4, 5 of the wave 3. Now, Nico knows that I hate seeing sub waves being larger than the main waves, right? So a sub wave of wave 2 being larger than the actual wave 2. So a lot of things to look at here, a lot of things to look at here, but price may move the same, but it may not. This may not necessarily be 100% correct count. Maybe in terms of regular Elliott wave, yeah. We'd have to look at something like this. So what I propose is we have this right now, and you can see clearly there's no subdivision in this 3 on a weekly time frame or daily time frame that would match within a wave 3. So wave 3 is not extended and is not subdivided. So what does that mean? One wave within a 5-wave impulse would have to be subdivided and extended. It could be that the extended wave is also the subdivided wave, or it could be that we have an extended wave and then a separate wave that is subdivided. In our case, most likely, if this happens, it would be that wave 5 becomes the extended and the subdivided wave, giving us 5 waves down. Right? Since we're merely seeing 1, 2, another wave here, and then we'd look for 5 waves down. So that's what we would be looking for in this case. Right? So that's the secondary count. Now, clear invalidations, right? Let's look at a few things. Very big invalidation is price coming into this territory, 33.02514, because first rule of Elliott wave, wave 4 cannot come into wave 1 territory. There, that's invalidation for all of this shit, which means it's not a 1, 2, 3. It's probably some sort of ABCX. And I don't even like it where this is the wave 1 and this is the wave 2, then the wave 3, or this is an A, this is the B, and then that's the C. So we'll have to look at a lot of things, right? So for me, clear invalidation would be 33.025. We don't want to see price come above there for this impulse downward. Secondly, let's look at retracements. 50%, let's look at wave 1 to the bottom, 50% retracement on wave 2, which means wave 4 is allowed or should be 50%, right? So if that's wave 3, there's 50% there, aligning with the sort of target that we have, right? A 1.618 extension. So we've got, let's just have a look at time as well. Here to here. Wave 2 is the same time as wave 1, so that's acceptable. Now, wave 4 cannot take less time than wave 3, so let's say if we started wave 3 there, right? It puts us there, and I don't want to see wave 4 go past 5 times, at a maximum, 5 times the length of wave 3. And we're approaching that pretty fast, right? It gives us until about the 6th of February. So this, if it's doing what it's doing, needs speed. So retracements will be shallow, and it needs speed coming to this level, because once we have taken liquidity down here and we are on the up and up, that means, remember previously we had this level as liquidity. Price comes in here and then rolls over. But in this case, if we are doing unheard of things, then this is on the menu, which is taken, I think. This coming into this. And this little high here would be enough. Now, coupled with that...
What price is that?
Sorry?
The last high, what price is it?
Which high is that? Which one are you talking about, Al Dente?
No, it's okay. I can look by myself. Sorry.
Yeah, I can show it to you. This high here.
Yes, there.
26,845.
26?
845.
Jesus.
Yeah.
Okay.
Right? Because remember, we're talking 28 to 29 at a max here. Now, FVGs at old lows that were broken. There's your lows here. FVGs being left behind. these become fair value for selling, because these SIBIs, sell side inefficiency, buy side imbalance, there were no buyers or no offers to any buyers within this range here. Right, let's zoom in a bit more. So no buy side liquidity was offered inside this. So all lows, imbalance, no buy side offered. If these guys, it comes back to my previous discussions here, right? If these guys are longing, they want to be selling to people who are willing to buy above the market price. So they would be here, in a slight imbalance in here, definitely up here, right? But for me, if you look at it, these highs here, this high took all of those highs. So technically there's no real liquidity above that high, which puts us at this guy here, the next available daily there, 26,845. So within there, and then the top being here, right? 29,284.
That will be also a market structure break.
Right. It could, it's already a market structure shift here. It's already a market structure shift here, right?
Yeah.
Because remember we had lower lows and lower highs. Now when it retraced here but failed to go lower, instead it retraced, created a failure swing, and then it went higher and broke above this. So the first high that it created here is a change of character. The second high that it created here now is a break of structure. It's already a break of structure. So we start to think sell side model to buy side model. Where would they most likely target? They would target old lows. And remember now, we're thinking about this in terms of an Elliott wave count. In terms of an Elliott wave count, we don't want it going to 33. And if they do want to sell, where can they sell to? Old highs, here, where they are willing buyers above the market price. Because no buy side was offered in this candle. These guys want to offload to somebody, and those somebodies are inside here. Right? I showed this to you on NAS the other day. So they have accumulated sell side liquidity, and now they need to blast it off because they need someone to buy their longs when they're selling, right? So these guys are going to sell here, and they need, or sell somewhere, and that somewhere is in there. They need people to buy it, and then there are willing buyers inside there. Clear validation again above wave one. We're not interested in this, right? Now, what happens when we break 33,025? Let's take away the Elliott wave for a second, and let's look at zoom model. So let's take away that as well. If we start to do this, accumulation, failure swing, open liquidity run, the lowest closing down candle before the liquidity run is there. That is where an entry will form, 19.4 on 8.15, right? Once we close above that 21.465.22, the structure has shifted on the zoom model, right? So accumulation, failure swing, open liquidity run here. I don't know if we do get a retrace. We may, because if we're looking at this as a 1, this as a 2, this may be the 3 inside here. The 4 comes down here, and then we get the 5. Because this is a C of a wave 4, we need 1, 2, 3, 5 waves up. So that will form an entry there. But let's say, playing devil's advocate again, we break above the wave 1 low. right? We break above the wave 1 low. What does that give us in terms of a price action count? It means that accumulation, failure swing, open liquidity run, push. Now we look for a retrace. Where is that retrace most likely to come? More or less, the zoom candle candidate would be the highest closing up candle before the liquidity run would be here, right? There and there. Right? I know you're not ready to see this, but it's something that may happen if we close above wave 1 low, which leads me to this wave 2 high here being inducement. Wave 2 high here as inducement because it was the high before the break of the lows. That means there's liquidity lying above there. So if we were in a situation, and this is a situation that no one is sort of expecting, right? So the least expected situation may be the most likely situation where this starts to do that, retraces in here, and then does that. Takes the inducement liquidity. Now there's your zoom model. Accumulation, failure swing, open liquidity run, push, retrace, continuation. See that? Now we'd only start to think about crazy things like this once we start to validate our bearish count on up here. Right?
So if we see consolidation above that 4, right?
Yeah.
That FE there, I think we need to start thinking that before we even break 1.
Of course.
Right, if we go sideways there and hold above
Of
it,
course.
and then
Now, this is a high time frame zoom model, right? So I'm allowing it to do what it needs to do, where it's that, right? Accumulation, failure swing, open liquidity run. There's the real high in the market. It pushes down, creates a dealing range. There's your dealing range here now. Now we start to think dealing range vibes, right? So let's take away any Elliott wave. Ignore the Elliott wave. I'm going to keep it here, but ignore it. Where is the premium of this range? It's above wave 1. What's up, Itzy? Yeah, you missed a lot, but I'm recording it. The premium of this range is above wave 1. So we have to start thinking of a possibility where if we fail here or consolidate above here, so consolidation above here, we go there. We could come back for liquidity here because we're working on another zoom model within this, right? Whether you take this as the zoom model, this as the push, right? Are you with me? This is the retracement. That's the next step. So all depends on what goes on in here.
so if we look, so the optimal trade entry, if we were looking to short up in that 50,000, right? 05.
Yeah.
There's an FEG. It's like the top of an FEG
Yeah.
too.
So wave 2 high is inducement.
Yeah.
Because
But below,
I
but just
don't
below
really
that.
like that 3 was this, right? 3 was this. This is not a 3. I mean, it could be a 3, but it's not the best of 3s. It's not even an extended wave 3. It's just, it's a something, right? And if I've shown you models before, and from past experience, that there's no speed until the order block is tapped. And remember the inducement model that I've shown you on a bullish and a bearish case, where we had this, we had an FEG somewhere here, price pullback, and then did this, right? And then suddenly it does that and takes guys out here, but comes back into the original FEG or the PD array you originally thought. But because it broke this high, you got bullish. You started entering, selling the house, the kids, everything. You started buying. And then suddenly it comes back and takes all of this liquidity in here. And then it does that, right? Bearish case. This is an FEG or order block, right? We front run it here. We broke above here. It does this. Taps the order block, FEG, and then it does that. So with that in mind, let's have a look.
Shit, that's so bullish.
It's bullish, right? But tides are turning a bit. Tides are turning a bit because imagine if BTC were to shit the bed right now. Where would most altcoins or anything be? It would wipe out a lot. It would wipe out a lot. So let's say this was the move here. This was the retracement. And then we got this down, right? But we've got our order block candidate all the way up here, at least. We've got some imbalance in here above that. So let's do this. So BTC doing something like this, getting everyone bullish again, would not surprise me. There's also imbalance in here before it does something like this. I would not be surprised. But we'll take it as it comes, because low time frame, what are we thinking now? Let's go. That we'll have to switch. You can see all of you went quiet when I mentioned 58,000. Let's go.
I'm thinking about the international economy, and it's a little bit in the way.
Yeah, it is.
Well,
It is.
So two things. One thing is we got to remember we're in the first part of the year, right? So when you look at, so from a macro standpoint, yield curve inversions, all these other things, recessions, when they truly hit, they take quite a while to kind of officially take hold, right? We're in that low period right now where the recession isn't going to happen probably for 6 to 12 months. The market has room to run, being the first part of the year, and Poison had mentioned this, and we had mentioned this earlier too. First part of the year, first half, first quarter, creates that upwick on the candle before the second half of the year we shit the bed. And in an illiquid market, which Bitcoin, crypto, all of it right now is illiquid, right? There's no liquidity whatsoever, which means it's easier to push price both up and down. So if Bitcoin wants to run right now and just keep going, this is the time for it to happen.
Recession talks
right?
are happening
in the market.
Yeah. So Powell didn't mince his words either. There is talk of this year being recession, right? End of 2023 or towards the end of 2023. So I would not be surprised at one last hurrah, to be honest with you. If I take away the Elliott wave, all of it, if I showed this to you and this was a 5-minute chart, what would you say? Or let me show it to you this way, right? Let me show it to you this way. There's the top on BTC here, right? Accumulation, failure swing, open liquidity run, push, retrace, continuation. You see that? Now, it doesn't matter what the time frame is. Here is the real high in the market, 61.78 at this particular time. The opening of that candle was here, and here. This is where I would expect price to trade to on a retrace. There, right? Now, here's imbalance here. There. And once we started to trade, we're not going to be taking anything blindly if this is the case, right? There's your order blocks forming at the highs. Once price trades through the order block, that is order block validation, this is market structure shift, right? Now, think about what I just showed you here. I showed you a zoom model. Think of this as the lows on BTC, and think of this as where we are right now. And think about this pushing above, this being a wave 2 here. And this here, we'll make it a thick line. This high here, I'll make it blue, being the top of the wave 2 as an inducement level or the high before the break of the low. There's your low. The high before the break of the low holds liquidity. There's imbalance in there. Price moves from liquidity to imbalance, imbalance to liquidity, right? Think about what I just showed you here. Now let's get rid of all of this and focus on this side of the world, right? It's just a bigger picture of what I showed you here. There's the wave 2 high inducement. There's your fair value gap inside there. There's a little bit up here. This is also order block candidate up here, right? There's inducement here. There's your zoom model. Accumulation, failure swing, open liquidity run. What is the high in the market before all of that? Let's go. The highest closing up candle in this case would be around here, right? If we go higher, we probably, let's go to a weekly. It's a crazy thing to think about, right? But let's just go here. Highest closing up candle is here, and that would be there. 2 blue lines. Let's make it blue. Horizontal ray. There. Right? Which is above the wave 2 high. Can you see that? Same story we had in here, just on a same story here, where the closes was the highest closing up candle was there. This is just on a really high time frame. Let's take some art fibs and play around. Original consolidation all the way up here. Let's see what this gives us if we take this as an entire range projection. Can you see that? What do you see there at the bottom? Anyone paid attention to the beginning of the stream?
The terminus fib.
Yep. Terminus. The move has hit terminus. Initial impulse, first objective, second objective, terminus. And when we are hitting terminus, you should be getting the fuck out of any shorts, because it's most likely the market's going to want to turn around.
Oh shit.
Were you there at the beginning, Al Dente? I showed it to you on NAS. I showed you terminus on NAS. If you were here, this was the original consolidation. This was the range. Let's look at that. What do we see there? Terminus, right? 6.5 to 7 standard deviations. And then also sort of reversing. So when we start to move from sell side of the curve to wanting to move to buy side of the curve, what then is on the menu? It's this, it's this, it's this, it's this, and it's this. To some extent, this. But it's never a straight move up. If we are considering this to be zoom, then we would look for breaking here, then retracement in here, then moving up here. So as long as BTC is bullish, we need to start looking for longs until it starts to turn bearish. So any imbalances at old highs, there's a fair value gap here right now on the H4. See that? We need to start thinking, what does it want to do inside here? Give us some structure inside an H4, whether it's this and then
So
this.
the discount could be the lower half from this value gap.
Sorry, the
Discount range to take a long.
yeah.
The last free value gap you draw.
There's a lot of imbalance below it, right? I just want to see what Nico is sending to me here. Yeah, right. So Nico sent me something as a wave 3. And I had the idea of this being a wave 3 purely because this is 1.618 standard deviations of this move here. So if we treated the move down here to here as the impulse up as a wave 1, and then this move down as a wave 2, then we're not quite there yet, Nico. So we'd want to push a little bit up as a wave 3. Now I'm not too concerned about, and we shouldn't be too concerned about BTC coming this low. I don't think this is the time that is going to happen, right? That'll be crazy. So we need to start thinking in terms of fair value gaps now becoming support. Because any PD array, fair value gap, order block, breaker block, mitigation block, they switch from becoming support to resistance, resistance to support. Now, do I think it comes, do I want it to come this low? No, I don't. Anywhere inside this H4 would be good enough for me. It hasn't shown a tendency, if we look previously on H4, right? Let's look at all of them. Any fair value gaps in here? A very tiny one here. Order block candidate. Tiny fair value gap in there. Next one. This candle to this down candle. Fair value gap. Price gone up. Next one. This candle to this down candle here. Fair value gap. Price taps in. 1, 2, and it's gone. Right? Same story up here. As long as it stays around inside here and gives us some sort of structure to work with. Now, low time frame, you can sort of say this is some sort of zoom. I don't like it. I'd like it to dip down one more, because if this is accumulation and all of this is failure swing, then we want to see an open liquidity run to down here somewhere, right? And then we want to see that, that, and that. There. Because this is your order block. Right? So if price taps into our order block, what do you think we should be? Buyers, right? 20K. 19.9. I'd start to look there because you don't want to see. We've never had, in this entire move up, you've never had a consolidation that has been as long as this has been so far. Can you see there? Look at the size of this, this, this. This is now longer.
Because the year weekend.
Weekend price action, fair enough.
Yeah, but majority of this move has been on the weekend, right?
Yep.
Yeah.
So if weekend
It's
PA,
not counting.
so if this low, let's go back to the theory that I have that when CME closes, right, that if all PA over the weekend doesn't exist. It's not real price action. So that would mean around here, all of this would be a void, right? Technically, all of this PA didn't happen.
Should we look at the big, what is it, Bitcoin 1 exclamation mark?
Yeah,
There's
we
a
can
CME
look,
chart,
yeah,
right?
we can look at that.
Maybe side by side.
Let's have a look here. BTC 1. And can we go lower? You see that? So none of this PA exists. None of that PA exists. All that we've seen does not exist. On an M30, the high was 19,995.
And this closed right at the order block we're looking at too, right at the bottom of it.
Yeah.
So fill the CME gap, wick, whatever you want to call it, and then fuck off again.
Now look at where this closed here. Like I said, here is actually here, right at the order block. All of this does not exist, right? When I say does not exist, it is price action outside of normal trading hours. It's weekend price action. It's a void, which means that there's a likelihood, even though you have a low here and all of this action inside here, that, what time is this? 16:30, right? Now let's go back here. From 16:30 to whatever happens until Tuesday, right? So we're not going to even worry about BTC from 16:30 here was the opening to whenever it is on Tuesday, right? Tuesday, what are we saying? Are we saying Monday evening, 18:30?
Why Tuesday? Tomorrow is no market.
Tomorrow's a holiday, right?
Yeah, it's
Okay.
Martin Luther King Day, al dente.
Okay, I didn't know that.
Holiday here.
So all of this would then be skewed price action or a void. Whatever happens in here, we're not interested, right?
So they pushed it above the 21 VMA.
So I would be looking, and this is where where Nico's count comes into play, where he actually has this doing something like that, right?
Nikos is the light.
The light, no, the light.
Is okay.
Yeah, the light. So within that, we have an order block candidate here as well, right? So if the opening price was here, wherever it closes, right? Say it closes, let's get rid of this, this, and this now, right? And even this because it doesn't exist. Say it closes for some argument here, right? So it did whatever it had to do, and then at this point we close or we open up here. It means from here to here is a void in price because price previously closed here. Weekend CME non-trading Tuesday, opens up here. This is a void.
Let's go down.
It wants to go down, my friend. It wants to go down to a PD array close to it, real price action. And what's close to it may just even be the top of this order block down here on M30. Right? Doesn't have to completely close. It just has to go to the, there, 19,511.
I shorted 19,500.
You?
I wasn't that wrong, but the weekend came.
The weekend came and tomorrow's a holiday. So even if it goes higher today, al dente, or tomorrow, or whatever it is, it means that we consider all of this to be not real price action. So wherever it closes, we would like to see price, because even though it's not real price action, the algorithms looking back would see all of this as liquidity. And it only remembers here where it closed. So if we go side by side, here, exactly where I drew the circle is where it remembers it was the last time before it closed. At here. This is where it remembers it was. 19,511. And it doesn't have to completely go down there to the opening of the opening of it. It just has to go to here, about 19,511 in this order block between here and here. We take that. It's decent enough because that's I think an excellent long opportunity there. Makes sense.
Yep.
If you are not familiar with the concepts, then every day we look at price action. We look at 4 p.m. to 4 a.m. being a void. Right? Extended trading hours, 4 p.m. to 4 a.m. We look at where, let me try and find an actual void for you, right? So you can see it. There's one that immediately does it. There's a second one. Okay, I'll show you two here now. Let's go M5. Here's 4 p.m. right? This is all extended trading hours. Here's 4 a.m. right? 4 a.m. open lower, so the market remembers this. 4 a.m. opens lower. Where does it want to go to? Can you see? It wants to go up to where it remembers last, to a PD array around 4 p.m. There's your order block, and then it wants to continue or do whatever it needs to do. Makes sense? The real trading hours should be New York. That's when the big boys are playing. Let's look at the next day. 4 p.m. here. 4 a.m. opens here and immediately rebalances. See that? Every single day. That's actually a trade on its own. When it doesn't balance, then you know that when it does come back, it's going to come back with a lot of speed. But mostly every day, this should be a simple trade to take. Let's have a look here. Look here, right? 4 p.m. Can you see this on the screen? $4 p.m. is here. All of this is an extended trading hour. 4 a.m. opens here. right? Opens here, it goes up, does whatever, but where is it drawn back down to? See? It will always get drawn back to the level, if not further. So I wouldn't be surprised that come Tuesday, market open, that we see a move down like that on BTC. Right? Enough BTC talk. I think we understand what needs to happen, and we are interested here.
So 19,500 has to hold.
Yeah, it should. You should start to see
It's good.
down candles form and reversal patterns form inside here. I mean, it can dip into, there's an FEG here that we marked for some reason. I don't know where it came from. A previous FEG, right? So there's the previous FEG on a daily of H4, I think. Yeah, H4. H4 FEG here that we took out or drew out in time. So even if it dips into this FEG here, I wouldn't mind it. I wouldn't mind it. 19.2. But I'm saying this is where you want your entry to start forming. Okay. Let's see how that goes in the coming days. ETH.
So not to put you on the spot here,
Yep.
boss, but if you had to pick between what you're leaning between, like an expanded flat or zoom model up to the 50s.
Zoom.
Okay. I mean, honestly, after you showing me that, I'd have to say the same, only because this move, as impulsive as it is,
It's not impulsive enough.
yeah.
And most of the shit came in with FTX and all that other shit, which the market has just ignored.
Meaning the move that we're doing now is impulsive enough that I don't think stopping at 26.29 makes sense to me.
Yeah. You see, all we need to do is, we don't need to catch the bottoms. We just need to know where the drawn liquidity is. Now, look at this one in particular, right? This was previous FEG. Let's close this, do this, do this, do this, do this, do this. Right. This is rebalancing all of this, right? The moment it starts to close above, which I think it is already on a daily, it has, yeah, right, closed above, it's a market structure shift in itself. It means this FEG, if the next candle does not come back into it like this, and then we start to reject and do that, this is not something you short.
So if the closes are on during a void period, does that change? Or I know we consider it
A void
sort
period,
of like non-price action, but
this was Saturday, this was Friday, so which means, let's go M30 again. Let's go M30 again. It means that it remembers price into here, which is okay, because it may want to dip and then go for it again. It's going to remember that there was a high made here outside of the period, and then 1630, this is what it remembers here or here, right? And all that happened in here does not exist, which means it's going to want to come back down to old highs, break a block, vibes, all of that here, right? Break a block, call that a breaker. FVG, all the good bits. There. So let's see if ETH wants to dip back down, because order flow is bullish, right? Once you start to break below these levels here, now that it's created, I'd start to get a bit more bearish. So we'll have to go up 1 or 2 levels. Let's see, H1, H4. Right, mostly on H4, balanced, right?
Is that a order block there?
This is an order block here.
Okay.
So that means we are not interested in being too precise. We would want to take just that there. That's what we want to take, 14, and then it coincides with the breaker and FEG. If we want to go even more on the FEG, then we'd say there. Drag that out in time, drag that out in time, there, right? So let's see what ETH and BTC want to do. So this wouldn't shock us come tomorrow night, 18:30, right? Shouldn't. Now that we know what the vibes like, shouldn't shock us. Also means everything's on the menu here. Let's take a look at ETH really quickly. What can we use here? Go to a weekly. Same story with ETH. Accumulation, failure swing, open liquidity run, push, retrace, continuation. That leaves us in the fair value gap here. And liquidity resting above here. Right, what was I looking at? Give me 1 second. Let's get rid of this, and this. What was I even looking on a weekly chart? Was I looking for this? Right, anyway, everything on the menu is all of these highs. Yeah, the light showing me good things. Hold on. Open in browser. Solana. Let's have a look at Solana. Right? So
Yeah, I was gonna ask the same. That's been probably the strongest coin.
yeah, we'll look at it now.
Like
So
3x off of the low.
it's madness. And everyone thought that it's going to go to shit because of FTX. Right. Take away all of this because we've already played all of this on the short side. We're now looking for things on the long side of life. Glaring relative equal highs here, right? On the menu, 47, 48. Everything's on the menu. This has rebalanced in here. I wouldn't look for Solana to go up that high, to be honest with you. Let's just check on a weekly. And then we'll come down to low time frame. Although there's still imbalance, there's no imbalance, but there's inducement liquidity up here. And then there's also inducement liquidity up here. So I'd look at those levels. But for now, we got to start thinking break a block. Break a block. Up in here. Breaker. And then obviously the relative equal highs in here. let's get rid of this. Let's make that relative equal highs. There. Where can it stop? Again, break a block inside here.
45?
Yeah, could go higher. Could go higher. Another breaker inside here, so we'd look for it to pause before any retraces. If it starts to just burst through, then we know for sure where it's going to, what it's targeting. Right, let's drop down to a lower time frame daily. I want to show you these things so you don't need me to show you these things, right? And let's talk about it. Zoom model, lowest closing down candle in the series was here. Technically, this is where your entry should form, which if it's bullish, it should be in this fair value gap all the way down here, right? So make a note of this. If it ever comes down here, this is where an entry is going to form. There. Right, because all the good bits again. Accumulation, failure swing, open liquidity run, push, retrace at some point. I'm not saying it's going to be now. It may be in the breaker block and then retrace, right? So it may be here, nothing higher than this for now. It may want to come in here and then do that and then that, right? So just keep an eye on this level in here. Lower time frames, anything in here. Let's go H4. I'd like to say in here as well, if you do get it. So let me not make this untidy. Let's do it this way. H4 fair value gap there, second fair value gap here. Order block high in here. Yeah. These are where I'd look for it to retrace if it wants to. And an entry to form around 1226, around there. And that's an entry for much higher pricing, right? And that's 5x, 6x? What is that? If you do get it, hold on. Fuck off. There.
Yeah, 6x.
Yeah. Usually, can you see how this is now moving almost algorithmically, right? But it's leaving a lot of imbalance behind as it moves. So until this starts to change downward, these gaps here are all sort of breakaway gaps, or you could say accumulation phases. So if this was a low risk buy here, then this was accumulation, reaccumulation, reaccumulation. You can see it's just accumulating and moving up. It needs an end target, and that would be in the breaker block inside here. So if you do get that retrace, BTC wants to do that on come tomorrow evening, then is this too much of a move? Rebalancing this? No, I don't think so. It's about $6, right? I take that. Yeah, I take that. Old highs as well. There. I take this level if it retraced come tomorrow evening. So yeah, try and long for tomorrow. Let's see. What else do we need to look at? Gold. Gold, gold, gold. Just keeps going, right? And I don't want to say it, but let's just have a look here. Gold is already doing gold, as bearish as we want it to be, is not looking too bearish at the moment, because whether we look at it two ways, as this being the zoom here and that retrace coming there, that's what happens next. Or whether we're looking at this being the zoom here of the highs, where this was accumulation, this was a failure swing, this was the open liquidity run, it means it wants to do that. Not sure how I feel about that. And if that's the case, then this is where you need to be looking for an entry. And we've set it here. So I've seen a lot of these relative equal lows just being left behind. But let's see once it starts to turn around, because let's get rid of that. Right now, not looking so bearish. On a lower time frame, shitty PA, and your next bet would be, if it retraces, I'd look here first. And that's on a daily. Target for the upside, longs need to sell above, or expansion needs order block, and then order block is all the way up here. At least there. So there would be an opportunity to sell gold, but I don't know whether it's going to be to new lows or just to the imbalance all the way down there. 1734. Anyway, inside here is where we'd look for longs on gold, to be honest, until things tell us otherwise. Because if this is just a retracement that's about to happen here, say it happens from here. If this is just a retracement, then retracements seek imbalance, and this is a big imbalance here, and then we start to do that. But I don't. It's a tough one, because NAS and gold supposed to be moving in opposite directions, but so far they're moving in the same direction.
Yeah, so I know I've heard you say that. Honestly, my take is DXY is a more important factor for gold, right?
Let's have a look.
And in a high interest rate environment, NAS tends to move down, but if the dollar is moving down, that makes that borrowing cheaper, right? So that's when NAS moves, gold move up. Gold moves opposite the dollar more so than it moves opposite NAS.
ICT sees the DXY at 101.3.
Right, so if this is retracement al dente, then you would be looking for DXY to come inside here. Right, inside here, previous highs here, 100.556, maybe a smidgen lower there. Right, and then it's breaker block vibes as well. With this being the breaker block here. One big breaker block on a monthly. On a weekly, maybe 2 weeks, we can modify that a bit. No, we can't. breaker. So DXY a little more down. That means USD pair should be moving until this turns around soon. What else do you guys want to have a look at?
Well, I sent a kind of subwave count
Yeah, I'm looking.
before lights.
Getting there. There we go.
This all feels like 4 of 3 to me, and then one more stab, and then
H4,
we start making a bigger move up for 4.
So you were looking at 1, 2 as we got it, and then 1, 2, 3, 4, 5. Yeah, more or less. I think pretty much how I have it, more or less. But no,
Yeah.
no, you have a 4 going higher. Okay, so going lower first, and then coming higher. Yeah. How does this work for Tesla?
So 5 of 3 coming soon. 4 retraces maybe to the 4 of 3.
Yeah.
Right, you can maybe get a 30-35% move
Yep.
there, or higher depending on what NAS
Yeah.
does, and then we shit the bed to that.
So
Yeah, your blue.
Yeah, the blue.
One. So you look at those equal lows back to 2022. I mean 2020. Those equal lows are about 91, higher up above the blue
Yeah.
box.
Oh, here. Oh, equal lows.
Higher, 91.
91. Here. Yeah.
I think that'd be a good level for 5 of 3 maybe. If we
Yeah.
get that sweep and then some buying comes in place, and that's going to tell me that this current wave should be done,
Let's
and then
look at
I'm going to look to
let's look at some
enter there.
FUB things. Let's look at some FUB things. How do I want to take this FUB? If I take it this way, it's not enough. If I take it this way, it's maybe too much. Let's try it. Phew. It's way too much, right? I don't know. Terminus at 12. It's crazy. But first impulse and second objective, we're more or less in line there. I just want to see how we can take this a bit better. If we do that. Yeah, so this way gives us a bit of a better flow to things. So you can see where it bounced off here is the second objective. So you could expect some sideways or some sort of reaction there. And then 5.5 and then obviously 6.5 to 7 where we have it down here as the terminus. So yeah, COVID lows. COVID lows, that's the target. We take the COVID lows. Did you do NAS? Yes, I did NAS. Did you do NAS? Yeah, I did NAS, but this is all going to be recorded on my YouTube channel.
So clarify for me. Sorry, I'm always getting confused. Which candle are we using to make that fib?
The fibs, right?
Or
So a few right. So let's do this. So it's either we use a range. So in this one, we don't have a clearly defined range, or we would use. So if we had to get range candidates, we'd say this range from here to here. Let's call it this range. Here to here, right? And we'd use body to body, projected down. If we were to use a single order block or series of a single order block, we'd use wick to wick. So if we go maybe one up, find an order block candidate we could use a series of order blocks. If we use these order blocks, series body to body, then it may be too much, right? Because that comes way too low. So I'd like to use this range, original consolidation at the top, body to body, which would then be 407.36 to 303.57. Do that. Yeah, so that's okay. That gives us some shit lining up here. Again, there's always the zoom lurking, right? But I don't see Tesla pumping. I don't know. I don't see it doing that. But where it is right now, you know it's an order block, right? I'd take it there. It's an order block. It's in an order block. We've come below these lows. We've taken liquidity. So if it wants to reverse, it can do something. But then again, in a bearish market, bullish order blocks mean nothing, right? So I wouldn't put too much weight to this order block holding. And we did say 166, 157. If it gets back up here, that would be something we'd be interested in. Remember in terms of fair value gaps, the fact that it's just tapped into this fair value gap here can sometimes just be enough. So you then need to start looking for market structure shifts on lower time frames if it is going to be bearish, and these stocks are just the fucking worst to deal with. But again, no market structure shifts happening here. I think only below this low we'd consider anything. 114, 115. So we do nothing right now. I wish there was a chart with none of these imbalances.
yeah, this low frame stuff down here, just I can't deal. I can't
deal
make
with
any
shit
sense.
like that.
So,
Can't deal with any of that. Can't deal, because it's not like we can say volume imbalances on the top, it's coming to fall and then move. No, it just doesn't work. Let's have a look. S&P. SPX, this has always been from way back when we first started, right? This guy here, 41.58. It was the high before the break of the low here, and that is inducement. So eyes on 41.58. If we get a retracement, we'll take it. There's your range we spoke about here. There's the range here. There's the expansion seeking order block. If we get this move down here to 38.45, which is the equilibrium of this range here, some imbalance inside here, this would be a place we'd be looking for longs to distribute above old highs. So if these longs want to distribute, there's nothing here. This wick up here took this liquidity, all of that. So nothing above there. The next candidate would be here. And then obviously next candidates would be here and imbalance in there. Right, so like NAS, we get retracement on SPX 38.45-ish. That's the one we want to take. And this is the imbalance around there. Let's go. There. FEG. Yeah. But I think tomorrow we'll and what I want you guys to, let me show this to you, right? What I want you to start looking at is if the order flow is bullish, that means retracements seek imbalance or fair value gaps, if you want to call it that, right? And if we retrace, then here to here is a high time frame imbalance. If we want to take from here to here, see that? Where did it stop? It didn't breach the bottom. So it rebalanced itself, went sideways, and then expanded out. Now, if this is consolidation inside here, we know that consolidation seeks equilibrium. So at some point when it does do that, and retracement seeks imbalance, consolidation seeks equilibrium. There's the equilibrium of the range. There's the imbalance that the retracement would seek. And the order block it would then seek would be above here. What's to the left of this? We have this order block in here. And then we have this order block, this entire series of candles. It's all up candles in here. You see that? This entire series are all up candles. That means they are all order blocks. And we take that entire range there. There.
So since we've tapped into that, can you narrow that down above that pick right there?
Yeah,
and just
can.
because it should go higher at this point, right? And just use that now as
yeah, we can use
our
this
real target.
because the imbalance is there, and then we can even go one better and use, yeah, I think that's the one to use right there. So like I said, this wick holds no liquidity because it's taken this. The liquidity is sitting above here, which just happens to be the inducement level or the high before the break of the low. So this is holding liquidity. And if you go back to inducement theory, that there are no shorts or no sells until inducement liquidity has been taken. We are further refining it by saying expansion here seeks order block here, which coincides with this being above the inducement liquidity. And we further refining it by saying if this was a consolidation here, then consolidations seek equilibrium. So the retracements should seek the equilibrium of this range. And if this is a retracement before further moving up, it should look for imbalance. So we've got equilibrium, we've got imbalance inside the equilibrium, and the drawn liquidity, we have it as up here. So we have all the bits that we need. Is there something we can use in here? I haven't checked. It would be an order block candidate. Let's have a look. Down candle candidate. Let's just try it. 3.5, 5.5, 7. It's a bit high. We'll try and find something inside here on a lower time frame that we could use. But ideally, I'd want to use whatever comes. Let's take a look at this, right? I'd want to use whatever this retraces and the down candles forming here, the order blocks forming inside this range when it retraces. I'd use that as a projection fib. For now, what happens if we use this set here, right? We're at terminus levels. So does it want to go higher? Maybe. Maybe we see some down days next week and then up days. But we know where we want to play. I want to play inside here on S&P. And if you do, then you know where it needs to go. If you know where it needs to go, so now you have a target. You know the draw on liquidity is going to be up here. You have a target for entering here. If you were to enter here, would you be selling anywhere inside here? No. You'd look here. Just above the high, just into this order block. That's where we'd look. And every time you got any pullbacks, we'd look to buy. Right? So here, like we did inside here, on whatever it is, H1, H4, whatever it is you're looking at, mark off the H4 imbalances. Yeah, that's one candidate. All of this was an imbalance at the time. There, that was rebalanced. So below us is just something in between here in our breaker. But let's see. What is this gap up here? Is this? Do you see this on your feed as well? Is there like is there a big of a gap like this in your feed at 4,000?
Let me check. That's your 4 hour?
Yeah, H4. It's just on the H4. There's nothing on the H6 or.
I've got nothing.
Yeah, it's just on H4 for some reason. Just on
I
H4.
don't have it.
Yeah. So market maker. So this is a case of consolidation reversal, not consolidation continuation, right? So price moved in, consolidated. I think a lot of the market, including myself, wanted that. But the market was having none of that because all of this was bullish order flow and this was simple retracements to rebalance. And now it's looking for that. End goal is always going to be the draw on liquidity up here, at least above those highs there. So we need to figure out where we can enter without breaking these lows, and that's about 38.45. 38.45, not much of a much. That's where we'd look. What else, guys? What else? Let's have a look. It would be mad if it actually does that right? If we actually see BTC fucking take off. And nobody would expect it to go that high either. That's very interesting. So if you look how the market moves from buy model to sell model, we can take a look in here. And go M1, maybe you'll find something. M1, let's go. Friday wasn't the cleanest of price action. I actually prefer M3. But there comes a point where the market pivots and it moves from sell model to buy model. And once you start seeing the pivot, everything to the left becomes the draw on liquidity until the objective is met. So bullish order flow would continue if order flow was bullish. So if all of this was bullish order flow, sell model, buy model continues higher. Let's have a look in here. There was some PA that I wanted to try and get a hold of. 10th of Jan. Can't remember where it was. Was it in here? No, I don't think so. I'll try and find it for you guys so you guys can actually see how the market moves from buy model to sell model, and on lower time frames how you could be playing any of those. Let's have a look. Yeah, here, right? Let me do some squiggles up in here. And this is on the 6th, Friday the 6th. Lego. Because for the group, we're going to start using extra fun things, right? We're going to start using these guys, which are changes in the state of delivery times. Let's get rid of all of this, all of this. It got rid of that, I don't want that. Right. This is M1 now, right? Market maker sell model. If this was the open liquidity run, as soon as price trades below, so it broke, let's zoom in here. Breaks a low and leaves an FVG behind. There. That's a sell. Breaks a low and leaves an FVG behind. That's a sell. Bottom of the order block would be here. See that? Sell. So you got your first, you got your low risk sell here. And then you got your first level of distribution. Broke a low, left a fair value gap behind here and up here. Second leg of distribution. And went to imbalance inside here, right? Now once you're inside here, so we had market maker sell model happening inside here. Low risk sell, first leg of distribution, second leg of distribution. Then inside here we got market structure shift. Once market structure shifted, if you drew a line down the center, you start to see it. Right? Can you see that? And then from at this point, it started to do that. Now, let me try and show you something here. Maybe I'm using the wrong CSD indicator. Hold on. Try and grab the right one. No. What the hell? Copy. Paste. Ah, it doesn't show in a 1 minute. But anyway, 12:12. Let's mark it off. Here, change in the state of delivery time. This is when you would expect speed to occur. 12:58, 12:57, second change in the state of delivery time. This is all based on a 3-hour cycle from 11 to 2, right? So there's your first change in the state of delivery, we start heading down. Second change in the state of delivery time, we start heading up. Now, watch this. Once market structure shift occurs, we start looking for FVGs down here. Same story in reverse. Fair value gap after a break of a high. There. That's your low risk buy. Second fair value gap after a break of a high. Here. Accumulation. Next one. High being broken, leaving fair value gaps behind. There. Highs being broken, leaving fair value gaps behind. There. Can you start to see that? And if you were to have taken a trade, all of these would have been on the menu. And you would probably have ended it up here. Right? Actual fact, it went all the way up here. But this is the simplest illustration of sell to buy or market maker sell model. Key time here, change in the state of delivery times. The market shifted gears and went from sell model to buy model. And that was that, right? But we'll start getting into that from tomorrow. I just want to, in the day, I'll try and figure out how I want to start these lessons as the first lesson. Yeah, so that's about it, guys. I think we had you had about 3 hours here of hearing me go on.
Thank you, boss.
Much
Appreciate it. This was awesome.
A lot of things to digest, but let's see tomorrow evening when the market does open.
So lesson all in Bitcoin. Let's go.
Yeah, sell the house, sell the kids. Right, as usual, I'll start uploading this to YouTube, but because it's so long, most likely it's going to take about 5 hours, but it'll be available on YouTube just now. Well, 5 hours from now, in fact. Right, thank you, gentlemen. Thank you, TikTok.
Take care, everybody.
Cheers.
Thank you.
No problem, my friend. No problem. Thank you all. How do we disconnect? There we go.